Quinn. Welcome to the Capital Call with the Millegan Brothers. I hope you like the new riff. I'm Quinn Millegan.
I'm Drew Millegan.
And we're managing partners of the Woodworth Contrarian Fund. And, it's Good Friday today. Markets are closed. Drew's on vacation here.
Yeah, I've got my Hawaiian shirt on and everything.
Oh, yeah. We are adding a new segment to the end. And it's basically this day in economic finance history. And I'll be able to tell a very interesting story. Drew hasn't actually heard it yet. So
yeah, I've intentionally avoided hearing it. So I'm very looking forward to it.
So it'll be at the end of this podcast. Hang in there.
I'm very fond of telling stories. We both figured we would make it a regular thing. He dug into a news archive, apparently.
Oh, yeah.
Like a physical newspaper. So
yeah,
we'll see what he finds.
I wanted to start off with something that happened actually in the previous week, but I think it's a good opener. As many of you might have seen, Elon Musk had a bit of an exchange with Navarro on Twitter. Navarro, I'll literally read the tweet, but Navarro was essentially saying that even Tesla was more of an assembler than a car manufacturer in the U.S., which Musk refuted and said, and I quote, Navarro is truly a moron. What he says here is demonstrably false. Tesla has the most American-made cars. Navarro is dumber than a sack of bricks, and then proceeded to call him by what I'll refer to as a slur. So, and then Trump responded on Truth Social saying, "Boys will be boys."
I mean, to be fair here, Navarro is the guy that came up with a pseudonym economist to quote for his absolutely crazy positions. Ron Vara, I believe, was the name that he gave this economist. He literally just puts made-up quotes in this economist's mouth to make himself look smarter in the op-eds he writes. It's absolute insanity.
But what this led into on CNBC, what was it, on the 14th, and today's the 18th, by the way, somebody mentioned something that resonated with me. I'm forced to trade on tweets rather than invest in companies based off of this economic environment.
Yeah, it's not a great investment environment if you like certainty, which is what the business market needs. Tell them how high to jump and they'll jump. But when you have all these decisions just being made by like one dude with tweets from his like presumably when he's like on the head or something, like it's just yeah.
Do you think he actually writes his own tweets?
Given that the copious amount of all caps used, I think it's possible.
Yeah.
He gives off hardcore divorced dad vibes.
I just have a hard time imagining that any 80-plus-year-old man can actually use Twitter.
That's a good point. Well, I think he's fairly tech savvy. It could be the case that he dictates his tweets.
No, that's true. That's true. And he has his dictator set on to all caps.
Yeah, something like that. I don't know. I seem to recall that they tried figuring out if Elon Musk was writing his own tweets, and they found that he really was the one writing them.
Yeah, I believe it. Isn't he ranked on Diablo too?
Yeah, that's true. He did lie about being ranked on Diablo 2 and literally bought somebody else to play for him.
Oh, I didn't know that. I thought he was actually ranked.
No, he's not. It was a whole scandal. He's not actually that good at gaming. He literally paid somebody else to rank him. That's just kind of the nature once you get to that level, is that you just kind of, they're very divorced from your average person.
Yeah.
Even the stuff they do that seems normal is sometimes not. So,
an interesting thing they said on the 15th, the day after this, was that, and I don't know if this statistic is still true, but through this volatility, every day this month that we've been up 2% or more intraday, we've also been red intraday, which is
that doesn't surprise me.
It's become a new norm. It's like the NASDAQ was up 4%, and that's not a normal swing.
Yeah, I think last time I checked the VIX at the end of this week, it was trading somewhere in the 20s.
Yeah,
which is still elevated, not quite as high as like the 40+ readings we were getting.
I think it hit 60. Which
Did
is crazy.
It hit 60?
Yeah, nearly 60 at least.
It's just all very uncertain times.
The one thing that everyone can be certain about is that they cannot be certain about anything.
Yeah. The one thing I will say is that up until now, it's all just been speculation. Eventually, time passes. The
Heals
clock
all wounds, they say.
heals all wounds, or it exacerbates them if you don't, treat them. But the one thing is that you can talk a big game all you want, but eventually, the other shoe drops. And what we're expecting here as we go into earnings season is you're going to start seeing companies report the results of all this kind of chaos, where they've either rejiggered their supply chains, or they've recorded actual real losses to the tariff the tariff taxes, or they've abandoned cargoes, or they've run their inventories. You can even, I'll give a concrete example here. You have Nintendo. You remember some people will just call the total consoles Nintendos. They had a Nintendo console back in the day, but the Nintendo's new console came out, and they announced it that they were going to open for pre-orders just before the new tariffs came into place. And that was before they also stepped off of the tariffs. But the problem is, you've still got 10% tariffs across the board on everybody except for Russia. And
Wonder why.
it's interesting. There's been other talks about that as well. People talk as though like the U.S. and Russia are the only people negotiating for peace and are the only people with agency in that fight. But so going back to the Nintendo, they announced this new console, and they already increased the price of the games. They're selling games for like $90 a game.
Just crazy.
I like the economics of gaming because, oftentimes what's fun about gaming is that, especially with like MMOs and stuff like that.
There's a lot of things that are fun about gaming. That's kind
there
of
are
the point,
a lot of
right?
fun things about games. But the fun thing about MMOs in particular is they're often actually used in larger economic studies because all the variables are very controllable, and you oftentimes get people interacting in a kind of pseudo economy. World of Warcraft in particular was famous for having a lot of economic studies involved with how players were interacting and buying thing and selling and spending their labor in an environment where you could control all the variables. It was also even used in epidemiology. World of Warcraft, there was a simulated accidental plague where there was an area of effect spell that happened in a dungeon. For those not familiar, an area of effect spell is like, imagine you got your little pawn piece that's in a dungeon fighting a boss, and the boss releases a spell in the area of effect, and it affects your pawn and deals damage. And there was a glitch with this one area of effect spell where it was dealing constant like damage, like, oh no, your pawn was poisoned here. And what would happen is these people would get out of the dungeon and they accidentally would have that area of effect spell still engaged for a bit. And the unique thing about this spell is that it could also spread. So, like boss here, area of effect spell poisons this pawn that you've got. He leaves the dungeon. You have other pawns come up to him. And then this pawn now spreads the area of effect spell to this pawn, which is very, very similar to how just disease works. It took him a while to fix that glitch, and in that interim, you had basically a plague spread to all the players on the server. Low level characters would just be instantly killed by it because the damage levels were too high, and that was used over and over in epidemiological studies, just studying how the spread of disease actually works in practice, because it's very, very rare that you have a disease where with 100% certainty that this person was affected at this specific time and this is where they went. And normally you're dealing with very, very much less high fidelity data where like, I think it came from this one place, but we're not sure about the individuals. And
they have real economies. It's like Musk buying that account, or someone who is just on RuneScape hitting trees and selling it as a commodity for real dollars.
Yeah, exactly.
Because the wages are so low in the country that they're in.
Oh God, that reminds me. Venezuela, for a while, because of their hyperinflation, they had an entire economy, black market economy, around acquiring U.S. dollars that was based on people mining stuff and grinding in RuneScape for RuneScape gold and then exchanging that for real US dollars. So, everything's connected. It's all just systems all the way down.
Speaking of markets, another thing I was going to bring up, there's a really interesting commentator that mentioned there's a difference between a market that's malfunctioning and one with just unusual volatility. And what happened the day before the tariffs were paused for 90 days is that night, which, by the way, Trump said he was watching the bond markets and said it appeared that traders were getting queasy.
That's certainly one way to put it.
But the difference between a malfunction and unusual volatility is just that if there's unusual volatility, you can still get the trade done. You might not like the price, but you can get it done. A malfunction means you can't make the trade.
Right.
And then you start the turmoil spreads to other markets, other assets, that kind of thing.
Contagion.
Right, contagion. And that's what happened the night before the tariff pause.
Yeah. And I do remember seeing a lot of those bond placements. They would literally just break the trades. They would say, "Hey, I'm not buying any of this. I can't sell at that price," and they would go off and do exactly what you said. So,
yeah,
it's that's what happens when you don't signal clearly to the bond markets and everybody what your policy is going to be, or you signal like, "Oh, it's going to be crazy." Like that's just. It breaks things.
Yeah. But luckily, no circuit breakers have been hit on the stock market. So, we've actually seen somewhat of a base. I mean, a lot of people who were going to sell out of the market already did.
Mm-hmm.
Can I predict that it's a bottom? No. But these are heavily discounted prices all across the board. I mean, I think we said it before. A bounce on bad news is kind of the environment that we're in, and we're coming up to earnings for some of our positions, but a lot of major public companies here shortly.
There is that is a good thing, a good interesting topic you bring up with bouncing on bad news. Sometimes I frequently find this is a quality of the markets that confuses a lot of people. Why did my stock go up when they announced terrible earnings? Why did my stock go down when they announced great earnings? And that applies to the broader economy as well. But oftentimes, what you need to remember is that the stock market is a market of discounting future results. It's a betting market, betting on whether something will be worth more or less in the future, which means the current price is the result of negotiation between players that don't necessarily tie their opinions to how the company is doing in the present moment. So you may have a company that slides on record earnings because investors expected them to do even better. Or you might have a company that goes up on terrible earnings simply because they're not going bankrupt.
Yeah.
And it's kind of the same thing with the economy here. I remember I had an exchange, actually, I believe it was on it was either on Blue Sky or Twitter. And somebody pointed out with the question, hey, why are we concerned about the market being worth the same it was in the beginning of 2024? And pulling up a long duration chart. And it's a fair question. Why are we freaking out about the market being basically worth what it was at the beginning of 2024? And the answer to that is that in 2024 at the beginning, essentially what the market was pricing in was, another 6 months to a year of growth to grow into that multiple that it assigned to the market. The market returning to those levels doesn't indicate that we are in the same place a year ago. It indicates essentially that the market is expecting no growth this year, which is not a great place to be in. And it's, of course, going to depend on your individual companies. But again, to Quinn's point, we saw selling across the board for good and bad stuff.
And part of that, too, is that they've just priced in the uncertainty, worst case scenario of all this tariff business, right? So the worst case scenario, I guess there's a little bit of an economic impact from tariffs across the board.
Yeah, I would say so. Some people, of course, this is what makes a market, is the disagreement in the what people believe will happen. Some people have argued that the market has not gone low enough. Some people have argued that the market has overreacted.
But it's a return to mean reversion. And in fact, I think I do have a rubber band.
Amazing.
So, essentially, and this is what we look for as value investors, but the market or stocks, individual stocks, will become over. Guys, the rubber band
the
just
market
broke.
just the market just
Market
crashed.
just broke.
Is that okay? You can still do this.
Yeah,
You just
yeah.
have
Well,
to-
essentially, the market gets overextended to the top end or the bottom end, and mean reversion is that mechanic of stock market gravity, where essentially, although this price of a stock is not necessarily the intrinsic value of a company, it will tend towards the intrinsic value of a company because it's inherently, like Drew said, the expectation of value by buyers and sellers, and so it will snap back to reality at some point, unless it breaks like this rubber band just did.
Yeah, and I would call that a market malfunction, as Quinn had so expertly described earlier. It's one thing to be over or underextended. It's another for the trades just to fail.
Yeah.
So,
Speaking of market malfunctions, you were mentioning something about shipping.
yeah, the one point that a lot of people have argued is not being fully priced into the market right now is trade just generally. Again, everybody sold off everything. But some trade is exempt, like USMCA, Mexico, Canada trade agreement. Goods and in some cases services are totally exempt from tariffs, even in the case of like new tariffs that have been imposed. For all of its posturing, the administration has largely kept to those trade agreements.
Yeah, even though it basically said it was not going to. But for example, and this is one of our current holdings, full disclosure, but Rail, Freight Car America.
Not talked about very much, by the way.
Yeah, very low coverage. Quite undervalued in our opinion. But they have a facility in Castaños, Mexico. Mm-hmm. They moved their production from, I believe the last facility was like Alabama, and during COVID they transitioned into Mexico, but it is fully vertically integrated. I mean, they have Mexican steel and their product is not subject to the tariffs, and they're not being tariffed because they have domestic steel.
I don't know if you saw CSX actually just recently came out with earnings and said they see no decline in order revenues for their freight.
And railcars are on a schedule, so they have to be replaced, even in bad economic times.
Right. So you've got a company with low-cost Mexican production, not subject to U.S. tariffs, selling into the market as a middleman for a good that is where the demand is not really expected to decline that much. The U.S. economy generally is more reliant on land freight by rail than I think a lot of people realize. Some of those loadings, freight rail in particular, is like a lot of the volume is stuff that you just dump into the carts, like bulk stuff like coal. So, even the container ship volumes declining isn't necessarily a huge deal for rail, is what I would say. I mean, Railcar America itself doesn't even really produce container cars as far as I'm aware. So it's what's more interesting in terms of the tariffs, I would say, is people have been overselling U.S., Mexican, and Canadian exposed stocks, and they've been perhaps underselling certain names that are really exposed to like Chinese supply chains, I would say, because one of the interesting things about shipping from China in particular is that yes, you have these massive, if you'll excuse my language, massive fuck off tariffs that are basically just gonna.
And that's French, by the way.
That's guys. French. Yeah, pardon mon français. I do speak a little bit of French. The tariffs are not the only item to consider here, because one of the extra fees that the administration has tacked on that's gone under the radar is that the administration is also now charging for Chinese-made ships making port calls in the U.S. And they're not quite as substantial as some people feared in some cases, and they're a little bit higher in other cases. But they're charging millions of dollars to these shippers just for docking with Chinese-made ships, container carriers. And so you have these taxes on port calls by Chinese-made shipping companies. And what's very interesting is that the U.S. does not really manufacture container ships or bulk carrier ships or even really LNG carriers or anything like that.
Isn't there that weird law that prevents manufacturing in the U.S.? What was that?
I hate the Jones Act with a passion.
Yeah, the Jones Act.
It's got a different name. It's like the U.S. Maritime something Act. It's a 1920 Act. It's been the law of the land in the U.S. since 1920. So
a lot of great things out of the 20s.
Yeah, a lot of great things. Yeah, definitely never made any mistakes. That's pre Bretton Woods. I'm pretty sure. Like that's just absolutely insane.
But
if you don't know what the Bretton Woods Agreement is, look it up. You will not be disappointed. It's very critical. More people should know what it is, but I'm not going to get into it because that would take a half hour.
But what did the Jones Act do?
So the Jones Act imposed a tariff, essentially a fee on any company trying to buy. Specifically what it does is it stipulates that in order to make a port call at a U.S. port, from a U.S. port to another U.S. port, you have to use a U.S.-made ship. Have to. Which essentially makes it impossible to have U.S. to U.S. port trade in the U.S. It was done as a protectionist measure to protect U.S. ship manufacturing.
And there's like one manufacturer.
Yeah, there's like one U.S. made cruise ship. There's a handful of smaller carriers that are made in the U.S. around. But the fact of the matter is, they passed this act, and then the U.S. shipping construction industry died anyways. Yeah. I mean, you have construction of military ships out of Newport News, Virginia, and you have a few scattered smaller manufacturers of trade ships, and that's it. Unless you're talking like fishing boats or speed boats or something like that, in which case that's not trade. That's, consumers. It effectively destroyed the U.S. shipping industry. It's been an albatross on the U.S. economy's neck forever. If you live in Hawaii, if you live in Guam, I'd assume you would sometimes wonder, why is my food so expensive? Why is our energy imports for our diesel generators so expensive? And this Jones Act is why. You literally cannot ship in U.S. made goods to like Hawaii and Guam in many cases because there's no ships.
Yeah, because you can't go from one port to another.
Right.
It's just so strange.
Which is also what makes this new port call fee so strange, because they're arguing that these fees won't be charged if you just use U.S. made ships. There are no U.S. made ships, and I find there's a fee here. LNG carriers are required to move 1% of U.S. LNG exports on U.S. built, operated, and flagged vessels within 4 years. The percentage would rise to 4% by 2035 and to 15% by 2047. By the way, I'm quoting Splash 24/7 here. They're free to access, great outfit if you want to follow the shipping industry.
Great newsletter that keeps you up to date on the shipping industry.
It does, and I can clearly tell that the intent here is to try and grow U.S. homegrown shipping manufacturing. But the reality is there is no expertise for this in the U.S. You are not going to get 4% of U.S. exports on these ships by what is this 2035? It's so short sighted. And, once you have the ship, what does it matter that it was built somewhere else? You have the ship, and we know from experience that these kinds of restrictions don't work to protect U.S.-based trade. What it is going to do is it's going to make it a lot more expensive to try and export liquefied natural gas, which is weird.
Because aren't we a net exporter too?
We are a net exporter right now. Yeah, we're a huge net exporter.
Why would you want to do that?
You wouldn't. You would only do this if you don't understand how global trade works. It's just a fact.
Yeah.
A fun fact. I actually know a fun fact about this.
Are you sure it's fun?
Related. Well, it's fun for me. Not fun if you live in Massachusetts. There is a small you remember back when some of the sanctions were first imposed on Russia in 2022. Well, in addition to other sanctions that were already existing. One of the sanctions imposed was that we ban the import of Russian petroleum. Liquefied natural gas specifically. And, you'd think this wouldn't affect the U.S. because we are a net exporter, but the problem was because of the Jones Act, there was no way to ship U.S.-produced liquefied natural gas from ports in the Gulf, like Louisiana, to ports in New England where there is no natural gas production. So there are certain parts of New England where they were actually importing Russian liquefied natural gas and were reliant on it because they literally could not legally ship from U.S. ports because of the Jones Act.
Yeah, this Jones Act, this seems senseless.
It is senseless. It behooves us not to be political, but this is an idiot's conception of how global trade.
You might
works.
have some choice words that Elon Musk used with Navarro.
Yeah, I'm not gonna side with the guy that makes up a fictional individual to justify his positions in op-eds. It's just a lie. So I mean, I want to caveat all this by saying I'm being kind of harsh. I do actually hope that this works. Experience shows you it probably won't, but if it did, it would be great.
Yeah, Rick Santelli said something. Now, I like listening to Rick Santelli, by the way, on CNBC. He has interesting takes, especially on the bond market. But Rick Santelli said, it's not how I would have done it. It's not how you would have done it. But it's really more about results than anything else. So that remains to be seen.
Yeah. One of the good things I can say about the way the administration has been handling these tariffs and trade policy is that they have at least been very uniform. So one criticism you could have of trade policy in the past is that if you impose targeted tariffs, what'll happen is that you will not get a rise in investment in domestic manufacturing of whatever the target good is. Because people will just adjust their supply chains to a country that's not tariffed. But if you have across the board 10% tariffs, there's nowhere to hide. So the argument becomes much stronger that we won't really have to deal with as much volatility of policy changes if we just invest in the U.S. and bite the bullet and figure out a way to make it locally. That is the positive argument here, which maybe it could work. I think things will get very expensive in the short run.
Yeah.
I'm already seeing a collapse of port call volumes and a lot of blank sailings.
Do you think that the world is over-reliant on Taiwan for semiconductors? I mean, is there a real risk that China invades Taiwan? I'm just thinking about that in the sense of U.S. manufacturing of chips.
What I find funny about Taiwan, there's an argument that it's a geopolitical calculation that Taiwan has made to make the world dependent on their exports of semiconductors. I feel
like they couldn't have predicted that, though. They must have just run into it.
It is an intentional policy on the part of Taiwan. However, they did invest heavily in innovation, and really, truly, they are the best in the world when it comes to semiconductor manufacturing, besides maybe like some facilities in the Netherlands and to a lesser extent the Chinese and some other places. But bulk of it is Taiwanese.
And Korean. Isn't Samsung Foundry pretty? I mean, they have a substantial amount of the market, but I don't know about that.
If you want the best semiconductors, it depends on exactly. Yes, you are correct. It depends on what kind of semiconductors you're talking about, and certain specialties. And some companies have their own production. Intel has their own foundry. But Taiwan, you could argue that we are over reliant on them, and that is by design. Taiwan doesn't want to die. Taiwan doesn't want. As is reasonable, they don't want China to come in and invade.
What do you mean? Why not?
Because they're not Chinese. I mean, they're culturally Chinese, and they still technically claim all of China in their constitution. But in practice, they're a fully independent country, and China always hates it when you say that. But in practical terms, the Chinese army is separate from the Taiwanese army. So,
fun fact on Taiwan too. I think it's the military has one of the largest, the highest ratio of guns per citizens per capita or something, because they have such a stockpile of ammunition. Just
I think they call it the porcupine defense.
Yeah.
I'm getting into something that I'm not actively. I don't actively have the facts and figures in front of me, but I do know that.
I know I quoted it before and got it wrong.
What Taiwan wants to happen is that they're not advocating that you recognize them. Just recognize that if China invades, you will lose access to many mission critical goods that Taiwan produces. And that is kind of their independent strategy, their self-defense strategy, really, against Chinese invasion. So the argument, is that, we should have more of this in the U.S. so we aren't relying on an island that could be invaded and cut off at any time. for our critical components.
Yeah.
What I find funny, though,
Yeah.
I have a very funny story that I would like to tell about the Taiwanese semiconductor, TSMC. The founder of TSMC in Taiwan actually used to work for Texas Instruments, fun fact. But he moved production
Wait,
to Taiwan.
is he actually from Texas?
He's from Taiwan.
Oh, he's from Taiwan.
Yeah, so
okay.
you get this repeated story in a few different industries where, you'll have a foreign-born specialist that goes to the U.S. for education or to work for a company. They decide that, they can't do as good in the U.S., so they they get expelled, and they take that expertise back home, and then they build a homegrown competitor.
Texas Instruments, by the way, famous manufacturer of calculators and bombs.
And bombs, yeah. I'm always surprised at the number of companies that make mundane stuff and they just make bombs on the side for the U.S. or their home country. But, that happened with the founder of TSMC. He used to work for Texas Instruments until he decided that he wasn't going to get anywhere in the U.S. So he founded TSMC back in Taiwan and had a massive success. And that actually happened also to the founder of China's space program, too. Fun fact. So, China wouldn't be in space if we hadn't expelled the founder of the space,
Well, I also saw that Macron is now actively, the president of France is recruiting scientists that have been fired from the CDC in American facilities. So flight of manpower.
Flight of expertise is what I would say.
Yep.
Bit of a brain trade. These are, you talk about the port call fees, you talk about the tariffs, you talk about the, the China tariffs, and this is all stuff where you won't feel the full effects of it for maybe decades.
Yeah.
You can go on for quite a long time and everything will appear to be fine, but it's really robbing the future to pay for the present is kind of what you see with some of these realignments. They cut the funding to the Weather Service, or they cut the funding to BPA, Bonneville Power Administration.
Which, by the way, BPA is profitable, so not quite sure what happened there.
A lot of strange decisions like that. They also cut funding to the Census Bureau. That's flown under the radar to a certain extent, but there's thousands of little cuts like this.
The Census Bureau will affect economic data that we have.
Yeah, I'm really worried about that. They cut not only paid positions, but they cut just the board of advisors to the Census Bureau for best practices for gathering data, which is unpaid, by the way. They cut volunteers. This does not bode well for the integrity of future data. I mean, you're talking if you were to fully cut the Census Bureau, you're talking Chinese levels of malfeasance in economic reporting. That will make everybody's jobs very difficult. It'll be hard to know if people are unemployed. It'll be hard to know if the economy is growing or shrinking, which I don't know. Maybe that's part of the point. It's just, these are things you will not see the full effects of for quite some time. And the integrity of U.S. Financial and census data is really something which I am surprised is being touched.
Yeah.
So, yeah. I like good data, as always.
Good data is good.
Good data is good. It's economics is sometimes criticized as a discipline which is over-reliant on book theories and short on actual practical data. The Census Bureau and the economic data from the U.S. various bureaus is the counterpoint to that. So not having that basically means you're reliant on conjecture.
I wanted to point out, Fed Chair Powell has been a contentious subject as of late this week. And, on the 16th, we learned some really important facts from the Fed. And I'm not going to get into those. But what I will tell you is that we learned that Chair Powell, Jerome, I'll call him Jerome.
Jerome Powell, the Powell, J. Powell.
No, just Jerome.
Just
I know.
Jerome.
I know him personally.
Right.
Well, that's how Trump talks to him on Twitter or Truth Social. But we learned that Jerome likes to play his guitars and go to the gym.
Oh, what a revelation after learning he was a deadhead.
Yep. Interesting guy. But you want to tell us?
Yeah, the Fed's in no hurry to cut rates. You have kind of this triple threat where you have, I think the administration was maybe expecting bond yields to drop, and they've kind of done the opposite. They pulled back a little bit. They were up higher, but the 10-year has come down a bit. And for those people that don't necessarily know the intricacies of the bond market, how the bond market works is, especially for U.S. government bonds, is you have shorter term treasuries and then you have longer term bonds, and you can plot out the yields of these various different durations of government debt in a curve, which is called the yield curve. So typically, how this works is that a normal yield curve, the shorter term duration will have a shorter yield, and then as you go up in duration risk, it'll go up. So you have a 10-year treasury that's it takes 10 years to mature and pay off, yielding more than a 2-year treasury, which will take only 2 years to pay off, and it's a measure of risk. What'll happen is that if the market expects interest rates at the Federal Reserve to be cut in the near term and to lower, that will flip. And so you will get like 2-year rates yielding more than 10-year rates, which is usually a recession indicator. Because usually when the Federal Reserve is cutting interest rates, it means that they're expecting the economy to weaken.
And mind you, the Fed has dual mandates: one, to monitor inflation, and two, unemployment. So that's really what it cares about, is unemployment and inflation.
Exactly.
And which is kind of why the president was really, really encouraging the Fed chair to lower interest rates in this environment because of the effect that tariffs had on the stock market. But the thing is, one thing to note is that it's not just Fed Chair Jerome Powell. It's a whole board of governors that are making this decision. So replacing him doesn't necessarily change the outcome. That's another contentious subject, because the Fed Chair is an appointed position by the president. Jerome was appointed by President Trump in his first term. And it's for a period of time that cannot be, it's a position that is independent, that they cannot be fired by the executive branch, except for cause. Now, the Trump administration is challenging this idea that what cause is, or that they can fire for any reason, essentially. That's being challenged in court. But the Fed itself, the Federal Reserve, is much more separate than most agencies. It really is supposed to not be interfered with by the U.S. government. And this is...
Well, that's how you get Turkey.
Right. You don't want political factors to affect the decision-making of the Federal Reserve, because they're inherently apolitical, but they don't do things preemptively. I mean, they're very much reactive to economic data.
I wouldn't call the Fed apolitical, but what I would say is the way the system is designed is to try to give the Federal Reserve chairman and the board members a longer time horizon. Yeah. So the Fed chair is appointed over a much longer period than politicians typically have in office. So, the president has to be reelected every 4 years, and as such, he's really got a very short-term time horizon. They're always thinking to the next election. The governors themselves that are appointed to the board of governors serve 14-year terms, and they do have 4-year terms on as the chairman.
Right. And the chairman is appointed by the president.
Yeah. So it's the idea is they can't really be fired. Like the chairman can be somebody else, but ultimately it's all the different board members that actually make a decision to raise or lower rates.
And mind you, Powell was appointed by Trump and then actually reappointed by Biden.
Yep. He's been a good chair. And quite frankly, he gets a lot. The Federal Reserve, by the way, exists to be a magnet for hatred. People don't understand banks. Your average person on the street doesn't know that the Federal Reserve sets an overnight interest rates for banks to lend to each other. And
it's not just a money printing machine. I see all this stuff about how they're the root cause of all inflation, and that's just not how it works.
No, and it's like it's fiscal, it's monetary policy, it's all of it put together. It's what is trade doing? What is what is the economy doing? It's very complicated. It's not as simple as just print money anymore. Although it was as simple as just print money in the past, and it is that way in some countries where the Federal Reserve is not independent, like in Turkey, where they had runaway inflation because Erdogan, the president / autocrat of Turkey, decided that he wanted to make his supporters happy by making debt cheap.
Emphasis on the autocrat, by the way.
Emphasis on the autocrat. That's right. You have personal experience with somebody that is in had to flee Turkey.
I'll tell you a quick story. This is somebody that I knew a long time ago. Their father was a journalist with this state media, and he reported on something that the government disagreed with, and they sacked him. They fired him. He sued the government. And he actually won in the courts, and they were required to reinstate him. But because it wasn't really that enforceable, they basically reinstated him as the worst possible position.
Yeah, was he like the janitor or something?
Well, I don't know if it was a janitor, but just the word. Basically, it wasn't. He won, but he didn't win.
Yeah, that's a problem with arguing against the government. You can win and still lose. So it's. You don't want that happening in the U.S. You don't want to experience hyperinflation in the U.S. because that's pretty much the reason that the Fed has not been cutting rates, is that because tariffs are inflationary, they just are, the Fed doesn't want to cut rates and make debt cheap at the same time because that will just cause runaway inflation. So he's, I think, doing the correct thing right now. And I also just want to emphasize that that's also why we have not seen the yield curve invert. If you remember what I said, if short-term rates are longer than long-term rates, typically the spread between the 2 and the 10-year, then you can, if those two aren't inverted, it's said to be normal, and right now the yield curve is normal. It was inverted for a bit just prior to Trump taking office because people did expect a recession, and then the recession hasn't happened yet. But because people are not expecting the Fed, it's fundamentally a measure of if the market expects the Fed to lower rates, and they are not expecting the Fed to lower rates right now.
Now, I do see the argument that they could have taken this as an opportunity to lower rates. And, people talk about the European Central Bank lowering rates, but they have a whole different set of statistics. But I still do see the argument that you could have lowered rates for a certain amount of stimulus because if tariffs are enacted, you have a lot of impact on inflation and unemployment. But while I maybe would have wanted the rates to be lowered at that point, I do understand that the dual mandate of the Fed is to take into account inflation and unemployment data, which at that time did not indicate anything for a rate reduction. But I do see the argument that it would have been nice.
Yeah. And again, as time goes on, we're going to start to see the actual measurable impacts of these policies. We're still in the phase right now where we're there's the fuck around and then there's the find out stage. We're still in the fuck around stage right now. Yeah. And maybe some of the policies we will find out aren't as bad.
That's true.
Which would actually be awesome. It's a natural experiment.
One can hope. And and I was going to mention apparently the administration is actively talking about potentially firing Fed Chair Powell before his term ends, which questionably legal.
But it's up in like a year, something like that.
Well, I think it's mid this year that it's up.
Yeah,
if I'm not mistaken.
This year. It actually ends May 15th.
Okay.
So it's coming up in about a month, which is part of the reason why people keep talking about it. They think if they just get a different Reserve Board governor in as chairman, maybe he'll cut rates. I would be surprised if that happened.
And I guess they want a more dovish Fed chair, which, by the way, if you don't know, some of these terms can be kind of confusing, but dovish versus hawkish, they always talk about with the Fed. Dovish is essentially lowering interest rates. Hawkish is raising interest rates.
Right. The financial industry loves to make up terms that obscure very simple meanings for reasons that I can't tell. I don't know if it's just to make it confusing for laymen, but a lot of these terms have very, very simple meanings.
You're thinking fast on your feet. You gotta figure out terms that that get across a much more complicated term while you're yelling at someone.
Yeah, man, I love talking about synergy and
Synergy.
all that.
What is this, a corporate board meeting?
Yeah, pretty much. I mean, we are the entire board of the fund.
That's true. That's true.
So, yeah, but it's what I find really interesting is that the Fed has a dual mandate. It hasn't always had a dual mandate, by the way. The
Oh, wait,
unemployment
when was the dual mandate?
in 1977.
Cool.
And that was in large part a response to the stagflation of that era, where you had a combination of inflation and unemployment, which was just absolutely miserable. You do not want stagflation.
Has nothing to do with deers.
No, it has nothing to do with tears. But it's kind of at odds with itself sometimes, because the Fed is a lot more limited in how they can influence unemployment than how they can influence interest rates. It's been described as a very blunt tool trying to perform surgery, which I think is a very apt definition of the Fed.
And it's a difficult job.
It is. Your job is to rain on everybody's parade when things are going well, and support them when things are going badly. Everybody wants the Fed to intervene, always, consistently, forever. But if you know anything about economics, you really don't want them to be doing that constantly, because it blunts the effectiveness of the tool.
Well, market actors are thinking very short term. I mean, that's why you need a long-term thinking, independent body like the Federal Reserve.
Right. So, I don't like the idea of the Federal Reserve being undermined. It scares me, quite frankly. So I like stability.
Yeah.
Oh, well, let me caveat that. I like stability in principle, but growth. I like growth. There we go. That's a good way of saying
growth and
it.
Efficiency.
Because, having a little bit of uncertainty in the market is what allows us to exist.
Yeah.
Yeah. If everything's too stable and, everything goes robotic, and why do we exist is kind of the existential crisis I have.
And also stability is also can include no growth, which is not what you want.
No, that's definitely not what you want. One of the underappreciated effects of a stagnant economy, rather than a collapse, or rather than just rampant hyperinflation, is just steady state for years on years, nothing happening. You can lose money in an economy just going sideways for years and years. Just because it's not dynamic, you're not innovating, you're not having things get better, not having things get worse, but it's just kind of like stagflation a little bit.
Speaking of a changing economy, I want to get your take on this, and we didn't talk about this before, but there's been some speculation on Elon Musk's recent involvement in a lot of world politics and economics, in that he has always had his number one concern as depopulation, because the population shrinks as you get a just hold on, bear with me. Population shrinks as you get a more developed economy, which is true and is actually a concern. I mean, the birth rate goes down and you see lower economic growth. So all of his pursuits have an angle to which it's about increasing the population. So I want to get your take on that. And I also
want me to comment on this. Do you actually want me to say something about this?
Yeah. And I want to bring in some context to this. It turns out he named his latest child Romulus because he's building a legion, and he's offering his.
Where's Remus?
Well, Remus might be out there.
Remus is the one that dies. So
Remus might be out there because he's apparently offering the mother of his children $15 million to stay quiet. So who knows how many kids he has, because he's trying to populate the earth with Elon Musks.
I think genetic diversity is a good thing.
Yeah.
You have too many. There's a reason they limit sperm donors to the number of kids they can actually legally have in most countries, because if you have too many kids by one person, eventually you get accidental inbreeding. As these kids grow up and then they date people they don't know or they're half siblings. So here's what I'm going to, I am not a biologist. I am not an ecologist. I am not even a demographer, really. And what I can comment is the effects of population growth or depopulation on the economy.
Yeah, and that's the root of it.
Yeah,
I just think the context is funny.
There are two ways you can grow an economy. You can make more just more as a general concept, more widgets, more items, more mining, more whatever. Or you can grow the total number of consumers without actually making the economy any more productive or efficient. So there's basically those two methods. So you kind of want your population to grow in order to have consistent economic growth that's stable. And that's really what we saw over the 20th century. You saw a big boom in the number of people born and number of people surviving as a result of better medicine too. Like the population, the demographic mix essentially just got a lot older because people were not dying in their 30s and 40s.
And you had a combination of industrial revolution and increase in productivity, no?
Yeah,
for that period.
It was all the best of everything.
Yeah,
basically everything was awesome. You had antibiotics, meaning that people don't die of preventable diseases, and you had people producing more with less stuff. Now, with that background out of the way, what you can still have economic growth with a stable or declining population, and you do this by making, again, more stuff with fewer people. So instead of needing 5 workers to make one widget, you only have 2 workers to make one widget, and then 5 workers can make 2.5 widgets instead of 1, which means you can exist with a smaller labor pool. And that's basically the only reason our Social Security system hasn't gone insolvent, by the way. Is essentially because we are more productive. The U.S. in particular has some of the most productive workers in the world. We've got it's a double threat where very productive workers, very high relative in migration and population growth. It's great. It's very rah U.S.
Yeah,
and
only reason we're growing is migration.
Right. Although admittedly our birth rate is relatively high compared to other developed economies.
Largely because of Elon.
Yeah, single-handedly. Another fun caveat is I can get into that in a second, but like my take on population degrowth is that you can still grow the economy. It's just a lot harder.
Yeah.
So like Japan's economy is growing right now, despite the continued collapse of their population. You can make it work. Instead of having 15 workers supporting like 1 or 2 elderly people, you can make it work with just 2 workers per elderly person. And I think that's a very positive story that some people sometimes sleep on. They extrapolate out current productivity for future elderly populations, and they think, oh no, we're going to have this massive apocalypse of old people that are all going to be in poverty. And it's like, I think you can grow your way out of this.
Yeah.
You can make things more efficient, and you don't necessarily even need to know what is making the things more efficient. You just have to know the trend of people working to make the economy more efficient over time and allow that process to happen. But I do find, I do want to share just an interesting tidbit about demographic collapse and growth. The birth rate in an economy is not determined by the overall population of reproductive age individuals, but it is determined specifically by the number of women of reproductive age in a population. So it's ultimately the women that decide how many kids they want to have in a population, regardless of if you have like a massive war that. The reason we know this is that during World War II or other world wars, you would see populations be decimated by losing what was at the time their fighting age male population, because it was men that went to war early on only. Although modern times we do have women soldiers. So, but you wouldn't see a corresponding drop in the fertility rate because the women back home were essentially having the same number of kids. So you basically had guys having a lot more kids and the women having the same number. So that's actually technically an economic argument in favor of restricting conscription to only men because it has fewer knock-on demographic effects later on. But it's a little bit sad to think about in a way that men would be so disposable, but it's what we measure.
Does Russia conscript women?
It does. It does. Huh. Fun fact. That's something I know. They do serve in the military. I don't know if they're conscripted.
Oh, okay. I was just thinking in the draft because their numbers have been decimated.
I don't.
Yeah.
The one thing that Russia does have going for it long term is the birth rates are low, But it's largely been the men dying, not the women. So that's a point in Russia's favor in a way, that they won't have total demographic collapse. Not they're not collapsing in other ways, but it's not an end of the world scenario if you have a low population, low birth rate. A lot of this is women just choosing to have fewer kids, and people are living longer, and it can be bad, definitely. Like, it's definitely a headwind, but you don't. South Koreans are usually used as a poster child, because if the birth rate tendency continues, if the population replacement doesn't happen, you can basically end up with a scenario where you accidentally lose half your population in 100 years. Like Koreans just effectively go functionally extinct, which would be very strange. I don't think we've ever seen that happen in history, that I'm aware of, at least not in a way that we've measured accurately.
Doesn't North Korea also potentially have a declining birth rate, which is interesting for such an impoverished country?
Interesting question. Answer is we don't know.
Yeah, that's true.
Because North Korea doesn't publish statistics.
Well, I think it's about time that we get into this day in finance and the economy. And Drew has not heard this story.
I intentionally avoided it.
Yeah, I will take a sip of my Celsius. Not sponsored, but maybe they'll sponsor this segment after they listen.
Yeah, drink up your Red Go liquid.
Yeah. So, let me get out my glasses.
It's late in the day, by the way. It's for a caffeine buzz.
Hey, you gotta stay energized.
All right. So he printed this out from like an actual scan of a newspaper, by the way.
Yeah, I mean, I actually originally found this in Wikipedia, and I couldn't substantiate it. I had to actually go to the Chicago Tribune to try and find the article that it had been referencing, because I literally couldn't find it anywhere else. But April 18th, 1925, from the April 19th newspaper in Rome. The title of this article is "Banker, Broker, Millionaire Riot in Italy's Marts. Protest Mussolini's New Order on Trading." And bankers, brokers, millionaires, and office boys rioted in all the stock exchanges in Italy today.
Office boys.
Yeah, I don't know what office boys are. Rioted in all the stock exchanges in Italy today as a protest against the government's efforts to stabilize money through curbing speculation. A new government edict provides that 25% of the value of all stocks and bonds purchased on a margin must be paid for in cash.
Wait, read that again?
Essentially, what it means is that any stock or bond purchases have to be paid 25% in cash.
Okay, so well, that's actually a fairly typical margin limit.
Well,
at least by modern standards. I'm sure back then it might have been a bit of a stretch. Like if you were like 90% on margin.
Well, no. I don't know if it's talking about like margin requirements. I think it's. So you literally can't. It's requiring a cash infusion, essentially.
Okay, that's a great way to suck equity value out of the economy and force a sell off.
Right, and so, and just the fact that they rioted. It says the rioting marked the second phase of the battle, which began with a broker's strike and a threat to close all the exchanges in Italy.
Oh, wow.
This threat was followed by Premier Mussolini's action overruling the decrees of Finance Minister Di Stefani and the issuing of orders relieving stock transactions to some extent. But since this order required cash deposits, it was seen that business could not proceed as usual, and in fact, a general slump in bonds followed. In Trieste, the slump in industrial bonds was so marked that the public entered the exchange and smashed the quotation boards. In Florence, operations were suspended because of riots, and the police were called to evict the crowds from the exchange. At Turin and Milan, the brokers engaged in fistfights.
Oh, wow.
And
How Italian.
And resolutions were passed and forwarded to Mussolini asking more concessions. Otherwise, the general slump would affect the kingdom's business as well as ruining through thousands of holders of stocks and bonds. So you have Italian brokers rioting, closing the exchanges, smashing the quotation boards, getting in fist fights,
Man, why can't we trade like that anymore?
You know what? This is inspiring me. Maybe we should start.
Maybe we should get in a fist fight, Quinn.
Let's get in fist fights with brokers.
I mean, gosh, you kind of see this a lot in autocratic states. Is that they like to try to push the brokers and the market makers around, because one of these things is that like open free trading is kind of a hallmark of a free society, right? Because you're letting individuals in the marketplace vote with their dollars about how much something should be worth. And in an autocratic society, an autocratic shift, they don't always like that, because sometimes the market says something that they don't like and they can't just go out and, arrest the people responsible for the price. It's just the price.
Yeah.
Not to say that it's a perfectly democratic system. I mean, you're still voting with dollars and not votes, of course. But it's
a different kind of system.
It's a different kind of system. It's an open system.
Yeah.
And so it doesn't surprise me that Mussolini would go in and be like, we need to rein in the speculation. The speculators, they must pay. They're doing bad things. It reminds me of criticism of like short sellers or something, or it reminds me of modern day trading restrictions in China.
Yeah.
When there have been threats in the marketplace in China to collapse, or there to be some sort of systemic issue, oftentimes what the Chinese government will do is they'll go in and they'll just basically tell all the brokers, you cannot legally sell. You're not allowed.
Not allowed.
Not allowed.
And that's just market manipulations.
Market manipulation. It also means that you don't deal with issues, because like there's a reason people are selling, right? Like maybe some company made a very bad decision, or there's like a systemic issue in the market someplace, or your real estate market is way over leveraged and it turns out it's not actually worth what they say it's worth. And people sell because they're like, I gotta preserve my value, gotta reallocate into something that's actually gonna make me money. And
I like that 20s little twang you had on there.
Yeah, the 20s were a great time for twangs.
So speaking of, by the way, I noticed that there's a UK firm that has a huge short position on Trump media, and it recently just had to report this because of German short selling reporting requirements.
Oh, wow.
And so now Trump media is asking the SEC to investigate the firm for its short position for market manipulation.
Trump media.
Yeah.
I would never make a bet on Trump media.
I think it's a risky bet.
Other.
But it's not market manipulation. I mean, come on.
No,
it's just
it's
a
not.
short seller.
People hate short sellers, and I think the hate is undeserved. Some people get really into hating the short sellers, and I think it's mostly just because the shorts happen to be selling something they own, and they want somebody to blame. Like, don't blame me. It was dead when I got here. It's like...
I mean, if there's some way I can blame the short sellers on Kohl's, I would, because they're going to lose their ass.
Yeah, I actually like to see a lot of short interest when I buy, because it means that you have the possibility of getting a short squeeze. Assuming you have done your research, you can't buy just on short squeeze speculation alone. I mean, you can, but do your research before you buy something where there's a lot of short interest, because sometimes there's a reason for it. Yeah.
Just in general, do your research, consult your financial advisor. And don't rely on this for any financial, tax, or legal advice.
I love that disclaimer.
Yeah.
I put it at the base of all my emails.
On that note, this has been The Capital Call with the Millegan Brothers. I'm Quinn Millegan.
And I'm Drew Millegan.
And we're managing partners of the Woodworth Contrarian Fund. And you'll hear that intro as an outro again. Shout out to Noah McGraw for recording that.
What a guy. He plays many instruments.
Yeah. We'll catch you next week, and might even start interviewing a few folks with some special episodes.
I have some ideas.
We'll see. Till next time.